Hello students, welcome to Accounting Explained at AccountWise Academy. This is Latha Venkateshwaran. Today we are going to see chapter 4 of class 11 NCERT Accountancy syllabus. The chapter name is Recording of Transactions 2. If you want to look into the important questions and MCQs, you can always look into our shorts of our channel Accounting Explained. In this video, we are going to see about balancing of accounts. Accounts in the ledger are periodically balanced to determine the closing balance of each account. So ledger accounts, we have seen many accounts like salary account, electricity account, wages account, discount received account, discount allowed account, etc. So these accounts will be periodically balanced and we will find the closing balance of those ledger accounts. Balancing involves totaling both sides of an account and recording the difference, that is the balance on the shorter side, to make them equal. So balancing means first we will total both sides of the account, that is debit and the credit side, and whichever side has a shorter or lower balance, that side the remaining balance will be recorded. That is, the difference will be recorded. The term balance carried down is used to denote the difference. So this difference we are writing in the account, no, on the shorter side, that will be written as balance carried down, which is then brought down in the next period. That is, after the total, we will bring it down for the next period, indicating a continuing balance. Okay, if the debit side exceeds a credit side, the difference is a credit balance. If the credit side exceeds the debit side, the difference is debit balance. Expense, loss, gain or revenue accounts are not balanced. In other words, nominal accounts are not balanced but closed by transferring them to the trading and profit and loss account. The meaning of this is, nominal accounts, they will not have balance carried down or balance brought down. They will simply be transferred to the trading and profit and loss account and will not be carried down or brought down to the next period. The same year it will be closed. Let us solve a question so that we will be able to understand how to do balancing of accounts. Okay, prepare proper subsidiary books and post them to the ledger from the following transactions for the month of June 2024. June 1, goods sold to Amit on credit rupees 5,000. June 3, purchase goods from Mohan Traders on account rupees 2480. See, on account, credit, everything means credit purchase. Okay. June 5th, sold goods to Rahul on credit 2100. June 7, Amit returned goods worth rupees 600. June 8, returned goods to Mohan Traders worth rupees 280. June 10, sold goods to Vinod on credit rupees 3300. June 12, purchased goods from Suresh Traders on account rupees 5200. June 15th, office equipment purchased from Gopal on credit rupees 3200. June 17th, bought goods from Rajesh on credit 4060 rupees. June 19th, returned goods to Suresh Traders worth rupees 200. June 21, received goods returned from Vinod worth rupees 250. June 23rd, purchased goods from Khanna and Company on credit, list price 5500 less trade discount. June 25th, sold goods to Anil on credit rupees 6600 less 5% trade discount. June 26th, sold goods to Sharma Brothers on credit rupees 4000. June 28th, returned goods to Khanna and Company worth rupees 1000 less 10% trade discount. June 28th, Sharma Brothers returned goods worth rupees 500. So this is the question. Let us see the solution and do the balancing of accounts, that is the ledger accounts. See, this is the question and this is the solution. Okay, what we are going to do is we are going to see each transaction separately and do the posting. When we see the question, we can find out that all the sales and purchases are on credit. If there is credit purchase and credit sales, then we have to open subsidiary books. Subsidiary books are nothing but special journals. I have put videos on subsidiary books, that is the special journals, and I'll be sharing the link in the description box. You can go through those videos for a good understanding. Okay. Coming to the question, the first transaction is goods sold to Amit on credit for rupees 5,000. For this, we have to open sales journal book, that is a special journal book. Okay. Sales journal book will have the following columns: date, invoice number, name of the customer, that is amount to be debited, amount. So the date of the transaction is 1st June 2024 and the invoice number of the transaction is not given. So we can leave that column blank. And here name of the customer is Amit. Amount of sales is 5,000. Next transaction is on June 3rd. Purchase goods from Mohan Traders on account rupees 2,480. On account means on credit. So if you have credit purchase, then you have to open a purchase journal book. And the purchase journal book will have the following columns as their format: date, invoice number, name of the supplier, that is amount to be credited, and amount. Date is June 3rd and name of the supplier is Mohan Traders. Amount is rupees 2,480. On June 5th, we have sold goods to Rahul Traders on credit rupees 2,100. So now we have to take the sales journal book. Date is June 5th. Name of the customer is Rahul Traders, 2,100 rupees. On June 7th, Amit returned goods worth rupees 600. Now Amit has returned goods. Already we have sold him goods. So now we have to open sales return journal book. The sales return journal book format is as follows. It will have the following columns: date, credit note number, name of the customer, amount to be credited now, and amount. On June 7th is the date and name of the customer is Amit. Amount is rupees 600. Next transaction is on June 8th. Return goods to Mohan Traders worth rupees 280. So what we have purchased from Mohan Traders, we have returned part of the goods worth rupees 280. So for this we have to open purchase return journal book, which will have the following columns: date, debit note number, name of the supplier, that is amount to be debited, and amount. Date is 8th June. Supplier name is Mohan Traders and the amount is rupees 280. On June 10th, sold goods to Vinod on credit rupees 3,300. So for this we have to go to sales journal book. Date is 10th June. Name of the customer is Vinod and the amount is rupees 3,300. June 12th, purchase goods from Suresh Traders on account rupees 5,200. On account means on credit. So we will go to purchase journal book. Date is 12th June. Name of the supplier is Suresh Traders and the amount is rupees 5,200. June 15th, office equipment purchased from Gopal on credit rupees 3,200. So this is office equipment. This is an asset purchased. So we have to write a proper journal. So when we write a proper journal, it is called as journal proper. We all know that journal has the following columns: date, particulars, LF, amount debit, amount credit. Okay. So the journal entry for this is office equipment. Office equipment is an asset. When the asset value increases, we have to debit it. So we debit office equipment, that is office equipment account debit. Date is 15th June. On the debit side we write 3,200. From Gopal on credit. So Gopal is our creditor. When the liability increases, we have to credit the liability. So Gopal has to be credited to Gopal on the credit side rupees 3,200. Narration is mandatory for any journal. So the narration is being office equipment purchased on credit from Gopal. June 17th, bought goods from Rajesh on credit rupees 4,060. So again purchase journal book. Date is 17th June. Name of supplier is Rajesh. Amount is 4,060. June 19th, returned goods to Suresh Traders worth rupees 200. So we have bought goods from Suresh Traders on June 12th. Now we are going to return part of the goods. We are going to write it in the purchase return journal book. June 19th. Name of the supplier is Suresh Traders and the amount is rupees 200. June 21, received goods from Vinod worth rupees 250. Already we have sold goods to Vinod. Part of the goods we have received back, so we have to write it in the sales return journal book. 21st June, name of the customer is Vinod and the amount is rupees 250. On June 23rd, purchase goods from Kanna and Company on credit. List price is 5,700 less 10% trade discount. So the list price is given as 5,700. On this 10% has to be deducted. 10% of 5,700 is 570. So on 23rd June, see the purchase journal book here. Name of the supplier is Kanna and Company. 5,700 less trade discount 570 rupees, which we have calculated here. On the amount column we have to write 5,130, which is the net amount. 25th June, sold goods to Anil on credit rupees 6,600 less 5% trade discount. So we have sold it for 6,600 less 5% trade discount. On this 5% has to be deducted. 5% of 6,600 is 330 rupees. On 25th June, see the sales journal book. Name of the customer is Anil. 6,600 less 330 is 6,270 is the net amount to be taken. June 26th, sold goods to Sharma Brothers on credit rupees 4,000. So we'll write it in the sales journal book since it is a sales. Date is 26th June. Sharma Brothers rupees 4,000 is the amount. June 28th, return goods to Kanna and Company worth rupees 1,000 less 10% trade discount. We have bought from Kanna and Company on June 23rd. The amount is 1,000. On that 10% of it is trade discount, which comes to 100 rupees. That has to be deducted and only the net amount should be taken as we did for our purchases previously. No. So the date is 28 June and we have to write it in the purchase return journal book since it is purchase return. Name of the supplier is Kanna and Company. Here amount is 1,000 less 100, which is 900. That is the net amount to be taken to the purchase return journal book. We have come to the last transaction of the question. On June 28th, Sharma Brothers returned goods worth rupees 500. On June 26th, we sold to them. Now they are returning part of the goods which we have sold. So we have to write it in the sales return journal book. Date is June 28. Sharma Brothers is the customer name and amount is rupees 500. Next step is to total our sales journal book, purchase journal book, sales return journal book and purchase return journal book. Okay. First we will take the sales journal book. Since we have finished all the transactions in the question, now we are going to total the sales journal book. On adding the amounts, we get 2670 of our sales journal book that has to be transferred to sales account. Similarly, in the purchase journal book, the amount when added comes to 16,870 to be transferred to purchase account. In sales return journal book, amount total will come to 1,350 that has to be transferred to sales return account, and purchase return journal book, the total of the amount column is 1,380 and it has to be transferred to purchase return account. We have completed recording all the transactions in the sales journal, that is a special journal or subsidiary books, sales, purchase, sales return, purchase return, and journal proper also we have written one entry. Now we have to record or post these transactions to the ledger accounts. Okay, any ledger account will have the standard format. On the left side it will be DR, on the right side it will be CR, and on the left side there will be date, particulars, JF amount, that is on the debit side all these columns will be open. Again on the right side or the credit side, date, particulars, JF amount columns will be opened. Okay, Now we have to transfer this sales amount 20,670 total to the sales account. What is the journal entry for credit sales? It is debtors account debit to sales account. Debtors is an asset. When the asset increases, it has to be debited. So we are debiting debtors. Similarly, sales is an income. When the income increases, it has to be credited. So we are crediting sales account. That part is clear. Okay. Now we are not going to take each debtor separately and post it in the sales account. That will not be done because already we have posted or we have recorded all the data separately in the sales journal book. Now we are going to take only the total, that is 2670, to the sales account. Here in the journal, what did we do for credit sales journal? Here debtors account is debited. So in the sales account, we have to credit the debtors. That is, so this is for the month of June. So we are going to write it in the month or end of the month, that is 30th June 2024. We are going to credit by writing by sundry customers 2670. Okay, on seeing now the total of credit side is more. So we take that total on both the sides, 2670 and 2670 on the debit side also. On 3624, we are writing by balance carried out 2670. Another thing I want to clarify you. See, previously I told all the nominal accounts should be transferred to trading and P&L account. Though sales account is a nominal account, we are not transferring it to trading and profit and loss account because here we are closing the book at the end of the month. When it comes to the end of the year, suppose if this company closes the books on 31st March, on 31st March, total of all the sales will be, that is for all the month's sales, will be transferred to the trading account. Okay, not in the middle of the year, we will not be doing it. That is why we are having it as by balance carried down. Similarly, we are going to transfer from the purchase journal book to the purchase account. So purchase account, we know the columns to be open: date, DR, CR, date, particulars, JF amount on the debit side, date, particulars, JF amount on the credit side. Total of purchase account is 16,870. What is the journal entry for credit purchases? Purchases account debit to creditors account. Right. So purchase is an expense. When the expense increases, it has to be debited. So we write purchase account debit. And again, creditor is a liability. So when the liability increases, we have to credit it. So we are crediting creditors account. Here in the purchases account, we have to take two sundry suppliers because here creditors is credited. In the purchases account, it will be debited. That is, in the ledger account, it will be debited. And the date is 36/20/24. Amount is total 16,870. Total of debit side is more. So we take that total on both the sides, 16,870, 16,870. On 36/20/24, by balance carried down 16,870. Same thing applies here. Purchase is a nominal account. Since we are closing the books by the end of the month, not in the end of the year, we are having by balance carried down. Next subsidiary book which we are taking is sales return journal book. Journal entry for sales return is sales return account debit to debtor account. This is totally ulta of sales journal entry. In the sales journal entry, debtors account debit to sales, that is the journal entry. So if you make it ulta, instead of debiting sales, we are debiting sales return here. Okay, sales return to debtors. See, the total of sales return account is 1,350 in the subsidiary book. Okay, so in the journal entry, we have debited, we have credited debtors account. So in the sales return account, we are going to debit customers 36/20/24, two sundry customers 1,350. Total of debit is more. So we are taking that total on both the sides, 1,350, 1,350. On the credit side, on 36/20/24, it will be by balance carried down 1,350. Next is purchase return journal book. The journal entry for purchase return is ulta of purchases. So what is the purchases journal entry? Purchases journal entry is purchases account debit to sundry creditors. So ulta of it is we are going to debit creditors now, and instead of crediting purchases we are going to credit purchase return. Okay. So total of purchase return account in the subsidiary book of purchase return is 1380. Coming to the journal, we have debited creditors in the journal. So in the ledger account of purchase return account, we are going to credit it. So on 36/2024, by sundry suppliers, creditors, all are same. Okay, 1380. Total of credit side is more. So we are going to take the credit side total on the debit side also 1380. On 36/24, to balance carry down it is 1380. Next step is to open all the remaining ledger accounts like debtors, creditors, office equipment we purchased, all those things. Okay. First, I am going to take sales journal book and sales return journal book and write the accounts one by one. The first account of sales journal book is Amit, rupees 5000. What is the journal entry for sales? Journal entry for sales is Amit account debit to sales account, right? So I am opening Amit account here. In the journal entry we have credited sales. So in the Amit ledger account we are going to debit sales account. So date is 1st to June 2024, to sales account 5000 rupees. Now let us see if there is any return from Amit. Yes, there is one return from Amit on 7th June. Okay, of rupees 600. Journal entry for sales return is what? Ulta of sales, no? So journal entry for sales return is sales return account debit to Amit. What did we do in the journal entry? Opposite of Amit in the journal entry is sales return, that we have debited here. Now in the Amit account, ledger account, we are going to credit it on 7/6/2024 by sales return 600. On seeing total of debit side is more, so we are taking that total 5000 on the credit side also. On deducting 5000 from 600, we get a balance of 4400. So on 36/2024, by balance carried down 4400 is the balance of Amit account. Okay. Next, in the sales journal we have Rahul Traders. Rahul Traders. So date is 5th June. 5th June. What is the journal entry? Rahul Traders to sales. So in the journal entry we have credited sales. In the ledger account of Rahul Traders on 5th June 2024 we are going to debit sales to sales account 2100. There is no return from Rahul. So no entry to be passed for, or no ledger posting to be done for returns. So there are no other transaction also for Rahul here in the journal sales journal book. So we are going to take 2100 total on the debit side, on the to the credit side also 2100 on 36/2024, by balance carried down 2100. So the balance of Rahul Traders on 36/2024 is 2100. We have completed Amit account and Rahul Traders account. Next account to be opened is Vinod. So we are opening Vinod account. In the Vinod account there is a sale of 3100. So the journal entry is Vinod account debit to sales. There in the journal entry we have credited sales. Here in the Vinod ledger account we are going to debit sales. Date is 10th June 2024, to sales account 3300. Okay, let us see if there is any return from Vinod. On 21st June there is a return from Vinod for rupees 250. Journal entry for sales return is sales return account debit to Vinod. In the journal entry we have debited sales return. So in the ledger account of Vinod on 21st June 2024 we are going to credit sales return by sales return 250. On seeing we find that debit balance or debit side total is more 3,300 we take it to debit and the credit side. And on 30th June 2024 buy balance carried down on the credit side. While deducting 3,300 from 250 we get 3,050 as the balance of Vinod account. Next is Anil account. 25th June Anil account, there is a sale of 6,270. Okay, so journal entry we are crediting sales. So in the ledger account of Anil we are going to debit sales. 25/6/2024 to sales account 6,270. There are no returns from Anil, so nothing to write on the credit side. Just we take the total of debit side 6,270 on to the credit side also. Now the balance on 30/6/2024 is buy balance carried on 6,270 for Anil account. The last account to be opened in the sales journal book is Sharma Brothers, 26th June, sale of rupees 4,000. In the journal entry, we are crediting sale account. So, in Sharma Brothers account, ledger account, we will be debiting sales account. Date is 26/2024 to sales account 4,000 rupees. There is a return from Sharma Brothers on 28th June, rupees 500. Journal entry for sales return is sales return account debit to Sharma Brothers. In the journal entry we have debited sales return. So in the ledger account of Sharma Brothers we are going to credit sales return 28/6/2024 by sales return 500. On seeing we find the total of debit side is more. So we take the total of debit side, that is 4,000, to the credit side also. Deducting 4,000 from 500, that is a sales return, we get 3,500. On 30/6/2024 buy balance carried down 3,500 Sharma Brothers account balance as on 30/6/2024. We have done the posting of ledger accounts from the sales journal book and sales return journal book. The next step is to take the purchase journal book and purchase return journal book. Okay. So the first transaction in the purchase journal book is on 3rd June Mohan Traders 2,480. So we open Mohan Traders account. What is the journal entry for credit purchases from Mohan Traders? The journal entry is purchases account debit to Mohan Traders. Right. So in the journal entry we have debited purchases account. In the ledger account of Mohan Traders we are going to credit purchase account. Date is 3rd June. So 3rd June 2024 by purchases account 2,480 is the amount. Okay. Let's see if there is any return from Mohan Traders in the purchase return journal book. Yes. There is return from Mohan Traders on 8th June. The journal entry for purchase return is Mohan Traders account debit to purchase return. In the journal we have credited purchase return. So in the ledger of Mohan Traders we are going to debit purchase return. Date is 8th June. So 8th June 2024 to purchase return 280. On seeing we find out the credit side total is more. So we take the credit side total of 2,480 to the debit side also 2,480. On deducting 2,480 plus from 280 we get 2,200 as to balance carried down on 30th June 2024. Next we have to open Suresh Traders account. On 12th June we have a purchase of 5,200. The purchase account will be debited in the journal entry. So in the ledger account it has to be credited. Right. So on 12th June 2024 by purchase account 5,200. There is also a return from Suresh Trader on 19th June for rupees 200. Okay, so 19th June, purchase return will be credited in the journal entry. In the ledger account of Suresh Traders, it has to be debited. On 19th June 2024, to purchase return 200 rupees. On seeing, we find the total of credit side is more. So we take the total of 5200, that is the total of credit side, to the debit side also 5200. On deducting 200 from 5200, we get 5000 as to balance carried on 30th June 2024. That will be the balance of Suresh Traders on 30th June. Next is on 17th June, Rajesh 4060. So we open Rajesh account. Purchase account is debited in the journal. So in the ledger account of Rajesh on 17th June 2024, we write by purchases account, that is credit the purchases account by rupees 4060. There are no returns from Rajesh in the purchase return journal. So we take the total of 4060 on the credit side to the debit side also 4060. On 30th June 2024, on the debit side we write to balance carried down 4060. Next account to be opened is Khanna and Company. Khanna and Company account we are opening. Amount is 5130 and the date is 23rd June. Purchases account is debited in the journal. So in the ledger on 20th June 2024 on the credit side we write by purchases account 5130. In the purchase return journal there is return from Khanna on 28th June rupees 900. Purchase return is credited in the journal. So in the Khanna and Company ledger account, we are going to debit purchase return. Date is 28th June 2024. To purchase return 900 rupees. On seeing, we find the total of credit side is more. So we take the total to the debit side also. 5130, 5130. On deducting 5130 from 900, we get on 30th June 2024 to balance carried down 4230 as a balance of Khanna and Company account. We have come to the last portion of the question where we have to post the journal entry to the ledger account. The journal entry which we have passed is office equipment to Gopal. For the office equipment we purchased worth for rupees 3200. First we will open office equipment account. So in the journal, opposite of office equipment account is Gopal. Gopal account is credited. In the office equipment account, we are going to debit Gopal. Date is 15th June 2024 to Gopal account 3200. We take the total of debit side, that is 3200 to the credit side also. Under the credit side, we write on 36/20/24 by balance carried down 3200. Next, we have to open Gopal account. Okay. Next, we are opening Gopal account. So, in the journal entry opposite of Gopal account is office equipment account. Here in the journal entry it is debited. In the Gopal ledger account we are going to credit office equipment 15/6/2024 by office equipment account 3200. We take the total of credit side, that is 3200 to the debit side also because the total of credit side is more. On 30th June 2024 we write to balance carried down 3200. With this we are completing the 4th chapter of class 11 NCERT syllabus. If you would like to inquire about the online classes which I take or to get more worksheets, you can contact us at acc.wiseacademy@gmail.com.